What is going on today? This is the first video in the trade recap new series. It's something that, to be honest, I should have started doing a while ago, but I'm going to start doing it now because why the fuck not? So we are going to be recapping my day trades that will be tracked via TradeZella, and then I'm going to be using these videos to pretty much talk about them and talk about the thought process, to journal my own stuff, and to hopefully have some aha moments myself. And it's like a forced way to go back over it. And it's kind of a way to maybe promote some dialogue of, oh, this is working, try this, try that, maybe this is going to help. And maybe it's going to be, an eye-opening aha for you maybe in the future. That's the point of these videos. So if you aren't aware that I have been essentially day trading one strategy that I have gotten pretty decent at. I don't want to say good. I've gotten decent at. And my P&L curve has been very solid and steady, as I've showed in past videos. The past 4 or 5 months, really, I started honing in end of March. I started to get a decent handle by the end of April. And from the end of April through now, which is now the beginning of August, we have only had 3 losing weeks the entire time. And they have been weeks that have been made back. They were not massive losses by any means. I am just coming out of a 4-day red streak. The market was just not aligning very well to the strategy. And I'll kind of talk a little bit about some of that here in this video via the first trade. And it partially threw off the first trade, even though the first trade should have worked. But I'll talk about that here in just a second. So today we traded QQQ and NVDA. $100, $104 is the P&L. I do want to mention though too that in this current environment or my current strategy and style, I trade with roughly $1,000 size per trade. So I'll open up the first trade and we'll look at the charts here in a second. And with $1,000 size per trade, I'm looking at a rough 10% stop. I say rough, okay, if it's 12 for some trades, whatever. If it's, in this case, it was 7. That's just where it ended up being. That's where the risk reward is. If I'm looking at a trade and I see the stop loss based on the option price volatility of the option contract that I've been watching, where my stop will be on the price of the stock, I don't want to get into something that's, 20% risk. I just won't take those trades, or I'll go an extra week or 2 out in terms of expiration to minimize that volatility, right? If the movements are big. So that's how it's going to go. So we got in with about $1,000 and we were up a little bit early on, and then immediately this kind of went red. And so the entry of the position was 4 contracts at 2:58, and that came at 8:51 a.m. So this is Central Time, hence 8:51. So let's jump back to the charts. And the point of this, man, is just I really just want to come in here. I got to adjust these colors again. I want to come in here and I want to just, talk about the trades. So what did I see? What did I play? You'll get a good sense of this as time goes on of my strategy. It's momentum based. And so I initially saw this right here. This, I call it a double bottom low, if you will, pretty much. These 2 wicks on the chart. So that's what I'm looking at. I'm seeing a movement down, a nice movement down, and I'm starting to see some sort of consolidation and tightening up, but pressure via lower highs and pressure on those lows. Bigger picture, I probably could have waited for better confirmation on this. I don't look at the 1-minute charts, so I'm not even going to pull them up. It's 5-minute charts only, and then I look at the 1 hour, or really, I go 5-minute to the 30-minute to the 1 hour, sometimes the 15-minute daily charts from there. But to be honest, the 1 hour and the 5-minute are really all I need in this context. I zoom out to the 1 hour charts, and here's what you're going to see. If I zoom out on QQQ, what we've got really, and this is what frames the trade here, is we've got QQQ in a downtrend. Okay, we've got a series of lower highs. We've got now a series of lower lows over the past couple of days and weeks now. And so where my blue line was where the entry was. We were near this low. We're closer to this low than to the recent highs, if you will, and putting pressure on them. Based on this pattern, we see that we had a break right here yesterday and a pullback and then a rip. It's not a complete momentum downside, right? So if it was a momentum downside, we would have this break right? And it would just kind of keep going. Maybe it would retest and it would just keep going. But instead of that, we got this break and then it came back above the break point. And then, so we're not getting clean price action from a momentum side, which just from a context perspective, that's important to know. So knowing that, if we were underneath these lows, right, I'd be a little more skeptical of the trade because I know, hey, based on what we've got, it could be if the same pattern is presenting, right, we could just go in, make a little lower low, then bounce back up, make a lower high, and just keep doing this, right? That's possible. So I had to keep that in mind. Hence, when I saw the 5-minute setup present and we were not at a new low yet, I knew, hey, we got lower highs. Based on the pattern, we can go make a lower low, and we did make a lower low later on. Now, this is a red trade. So what happened? Why did I stop out? What was the reason to pussy out on this trade? It was pretty simple. You notice that I have the VWAP in the chart, but that's the only indicator. The only other one I'll use is maybe the 9 EMA, but even that doesn't really matter unless it's respecting it. You can use the fucking 10 EMA, the 9,000 EMA. It doesn't matter. Use an EMA. It doesn't really matter if you want to or not. My plan was enter on the break to low of the day, which I did right here. And we were up a little bit. We were in some nice, some small profit initially. And then it came back and we got these wicks. And my stop loss right off the bat when I went into this trade on this break was going to be a break above the breaking candle 5-minute high. So as you can see, we kind of got screwed here. Not screwed, but we just got stopped out barely, and then it went to our take profits and so much more, honestly. So it realistically could have been a one and done type of day. Maybe I would have taken another trade, but it could have been a really nice one and done type of trade. That would have worked very, very nice. I'm sure the contracts went way over 10, 15, 20%, something like that, which would have been nice to scale out into. But I respected the stop, and so once we got above that, I stopped out. I was hesitant to this because I was like, 10% stop loss would technically be this lower high, and so I could have done that. I think the 9 EMA was somewhere up in here as well. That's why I was like, I didn't love it. And now looking back, you have to expect more of this, though, when you're looking at QQQ. That's an average. It's not one individual stock. The reason why I've been preferring individual stocks lately, simply put, is that you're going to get better downside momentum moves and upside momentum moves when we have momentum. If we've got a collection of stocks here, like 3 stocks that could be weak today are pushing lows that are pulling Q's lows, but then the other 3 that are big weights could be pushing back up, right? So that's just kind of like the push and pull. Eventually it went down. And it would have worked, but that was the reason for stopping out. So looking back, what I could have done here is said, nope, I'm going to put my stop loss at 10% and look away and walk away. In this case, I kind of micromanaged it. Maybe that's because I've been kind of getting screwed and faked out in the past. When I saw this candle kind of screw me, I'm like, I'm going to make sure I keep this stop nice and tight because this has been the pattern the past couple of days. We kind of have this nice push and then immediately reverses and gets stopped out and it has a bigger move up. I'm not going to get screwed. I'm going to just take it when it breaks the pattern of these lower highs. In this case, it kind of hurt me. The next trade was over on NVIDIA. Why NVIDIA? Pretty straightforward on this one, man. It was literally the weakest stock of the day on my watch list. And I trade about 10 stocks. So just picture the biggest large caps with the best option volume, tightest spreads, plus throw in, QQQ, SPY, and an IWM are kind of the stock list of what I trade. So blue line right here is what I trade on NVIDIA. Why was that a point of interest? Well, on NVIDIA, right, we've got essentially a pattern right now of lower highs, and then we had these 2, lower lows. So we're trending down. So we're biased to the downside here. I'm looking for downside plays. If it got back above here, I'd consider a long, because NVIDIA is a really nice stock and it tends to move pretty nice once it breaks resistance, but it didn't, obviously. So 2 spots I was interested in is, hey, we break below yesterday's low. Okay, good. And if we break below these lows, even better. The move really occurred very rapidly off the open, and it never provided a 5-minute opportunity for me of consolidation until a little bit later. And when I say later, it just means the move has, a large part of the move has potentially already occurred. So we got a big move. NVIDIA opens up around 444, 445, give or take, and then it drops within the first 15 minutes. It drops down over $10. So it drops pretty big, but is that a bad thing? No, we're breaking down. We're below some key levels. We're below prior supports, below prior bounce zones. Great, we're trending down. On the 5-minute, we're below the VWAP. We got momentum to the downside. Not that really the VWAP matters. It just, you can pretty much just say, hey, we got a big move down. Now we're in consolidation. If we're going to get continuation once this level breaks, we're going to have a nice move down. And so we ended up getting that, and I took NVIDIA on the break of this level, and then we ended up having a little consolidation, little drawdown here, and then boom, big move to the downside on NVIDIA. Let's go back and check on that bad boy, and we can see next trade. No, sorry, it's going back to yesterday. Previous, technically the previous was not, this is not the previous, this is what I took afterwards, but whatever. So 180. I only got in with $920 because the contract pricing was like at 4 something. I didn't want to go to the next strike or whatever, so it worked pretty decent. And I ended up taking profits nicely into this first big move on the first contract, and then it kind of back tested a little bit, and then it sent it back up for more, and we honestly missed out on a fuck ton more. But you can't look like that because look, I got in here, first take profit. I got in at my entry point on these contracts, which is pretty cool about TradeZella, was at 460. Next take, or by first take, that was my entry. Take profit 1 at 525. That was at like 15%, almost, I want to say. And then next take profit at 575. The contracts went to a high of the day of over $9. $9, dude. So, do I necessarily care? No. Why? NVIDIA's a beast, dude. NVIDIA's a beast. So, like, essentially, here's that big push, right? I'm locking gains into this right here, and we got pushed down to here. This is awesome because I was able to risk and lose 75, and then I came back and made 180. So, if we think about it from that perspective, you know, my head and where my head's at, that's really good because it just shows you the power of this strategy, that if we keep our stops, you know, 10% or around 10%, our winners could be large on big momentum days. And hey, by the way, like NVIDIA did reverse massively, so it wasn't a complete trender. Like there will be days where we'll have stocks that just go all day. You know what I mean? And will you catch the full move? Probably not. But will you be able to catch 15, 20, 30% sometimes? Yeah. And if you can catch that with the 10% risk, talk about positive risk reward, right? So now all you got to do is get your win rate to around 50-50. In this case today was 50-50. And you see the potential the strategy has. So that's kind of what I wanted to hit on and what I want to touch on in this video. It's really cool because as I scale up and have more size, you know what I mean? And you're playing 10 contracts, 15 contracts, whatever. NVIDIA's, contracts are expensive. Let's say you're talking, I only had 2 because they were like $4 or $5. If you're playing, 4 or 5 contracts, it's a little bit easier to leave that last one on to ride, lock it in, lock 2, lock the 3rd, lock the 4th, and leave that last one on to ride and potentially scoop up an extra couple $100 because of the potential downside that we see on some of these bad boys. So that's where my head's at. I'll get more into the other stuff. I have a video coming out this weekend that'll talk more about how do I deal with the drawdown and stuff. But going back to the dashboard of TradeZella and shit, here's my week. It's technically down 334. We had just 3 trades that didn't work the day before. We had 3 trades, 2 trades that didn't work, really 2.5 the day before that. So the market hasn't been aligning very, very well. When the market does align very, very well, you can see how we can take advantage. And that's what I was doing prior. And so we'll see what we can do. Average win-loss just so far this week is good. And over 1, I'm happy. Want to get more data there. Win rate's so bad. This gets back up towards 50%. And let's talk. I mean, once we get that, if we can get there, we'll be looking good. I will say that there was one missed opportunity today. I know this is a long video, but I think it's valuable stuff. And I'm not going to edit these videos. They're just going to be off the cuff. Just let them go raw. This is what I missed on Meta. I was actually on the phone, and I was technically still in the NVIDIA trade this time. So I was like, I'm not going to fuck with this thing. This white is a gap up from earnings from like 2 weeks ago on Meta. And so this was a pretty clean one. It was a little more volatile. So like this, as in this consolidation below VWAP was a little more than I would have liked. So I probably would have had to go out an extra week or 2 on the contracts, to be honest, to be safer, to allow it to have a stop loss here and then have my take profits down in here. But it would have worked beautifully on the break here. Massive candle to the downside and really never backed as it just pushed lows. So I was saying like this was a missed opportunity. Could have taken this trade. My limit is 3 trades per day. I won't do more than that. If I had taken this trade, we could have had probably closer to $300 green day, because I would have had to then think about this. Obviously, how would I have? I don't know how I would have traded it, but looking at the chart, looking back to how my strategy works, I just don't see how I would have gotten screwed in any way or messed this up. I would have taken profits at 10%, and I probably would have gotten, unless maybe this wick freaked me out. I don't even think so, because I put my stop loss back to break even, so it wouldn't have gotten even close on the options. I would have probably taken profits at 15-20% on the next contract. If I took 2 contracts, if I took 3 contracts, dude, even better. So that's the thing. I look back, but it just shows you the power of what the system can be. There'll be trades tomorrow. There'll be trades the next day, and then the next week. I'm not too worried about it, but this was a missed opportunity that I was looking at. Just shows me that the plan, the strategy, the system is working nice. So looking for that, looking forward to more of those, more setups like that in the future. But hopefully this was helpful. Leave a like. And if you want more, or if you want to see these, subscribe, and I'll post these guys up. You're kind of just seeing me going through it raw. I'm in the process of scaling up, and it just so happens that I went on a 4-day red streak after scaling up. Looking back, there's nothing in this 4-day red streak that I would really redo. There's maybe some things that I questionable, wasn't perfect, could have maybe just avoided it, but there's no trades in here that I'm like, fucking idiot, dude, you shouldn't have touched that. So I don't really feel too bad about it. That said, thanks so much for watching. I know this is a little bit longer than it probably needed to be, but going forward, they might be shorter in the future. Hope this was helpful, and I'll see you guys in the next one. And links, resources in the video description box. Peace.